All right, guys, so if you've ever wanted to get into options, this video is for you. This is going to be a high-level overview of how to get into trading options in the stock market. Options are pretty nice because it allows you to trade with a lot heavier of a position with a lot less cash. Now, if you want to learn more about options, that link's going to be down there below. Join up on our free Discord. I give out a free daily watch list every single day of the top 5 options that I'm watching, and I give you price targets as well. So like I said, this is going to be a very high-level overview about options. I want you to have the least resistant path possible to learn this. Options are very complicated. There's a lot to it, but this should at least get you on the ground running. Now, in this guide, we're mainly going to focus on the stocks to find or trade alongside options because not every stock is good for trading options. And then I'm also going to show you the key components when it comes to options so you don't waste a lot of your time and you're able to just go just like that and execute. So like I mentioned earlier, you can make money in both directions trading options. So if you're going to be betting on things going to the upside, that's where you're looking at calls. If you're going to be betting on things going to the downside, that's where you're looking at puts. So calls and puts are really the two things you're looking at when it comes to options. Now, the main stocks you want to focus on when it comes to options is a lot of these big companies. The bigger the company, typically the better the options chain. You want to make sure that there's a lot of people trading the options that you're trading, because if they're not, it can actually impact your success. What it's going to do is it's going to make it harder for you to buy and sell an option contract. Another thing as well is that you're going to have what's called wider spreads on the price that could really impact you, because even if you can buy or sell this thing, you're not going to get the best deal possible if the spreads are wide open. So a lot of big companies are going to be like your Teslas, your Microsofts, your Apples, your Googles, right? A lot of the big names, Meta, those are the main ones that a lot of people focus on when it comes to options because it just keeps things simple and they're typically a lot safer to trade. Here are the key components when it comes to options. So we're going to pretend like we're using Robinhood. I know a lot of people like to use the Robinhood app. These are the 5 main components that I'd be focusing on when it comes to options, at least from a high level. Again, this is very rudimentary, but it should still get you started with being able to execute. So if you take a look here, here's the 5 things we're looking at, right? We're looking at strike price, expiration date, calls or puts, options volume, and spread. I'm going to walk you through each one of those. The strike price is going to be this top left number here. These numbers here, the big bold ones, 170, 167.5, 165, that's called your strike price. And that's essentially the price that you're betting on the stock getting to, or the price that it's going to be. The next one here is going to be your expiration date. The top bar here on the Robinhood app, you're going to see a handful of dates, and usually they're separated in increments of about a week. There's a lot of options expire on a Friday. When options expire, they'll expire at the end of the day on Friday, and when they expire, it automatically executes. Whether you're up or down, it's going to get rid of it because that is simply when it expires. The date here is a critical part of options trading. Usually the further out you go in dates, the less risk that there is. However, those options are going to be a lot more expensive. Next one is calls or puts. Now here is the absolute bread and butter of options. You can make money in both directions, guys. If you want to trade to the upside, that's going to be your calls. If you want to trade to the downside, that's going to be your puts. If you bet on things going to the upside, that's buying a call, and then you sell the call once you hit your price. Same with puts. If you're betting on things going to the downside, you're going to be buying a put, and then when you hit your target, you're going to be selling that put. Now here's the most critical part that I mentioned earlier: options volume. This is important. This is all tying back to the type of companies you're looking to trade into. The volume is something you want to pay attention to. Now, general rule of thumb for me, a good volume to look at, I would say anywhere from 500 to 1,000. That's a pretty good spot. 49,000 is tremendously high, but as you can imagine, right, in this example, this is Apple. This is one of the most liquid, highly traded options chain that there is on the market. And then the last thing here is the spread. In this example, this is a fairly tight spread. Basically what the spread is, it's the difference between the bid and the ask price. It's how many people are trying to buy this thing, and it's how many people are trying to sell this thing. And then the spread is the distance in between. Some spreads are 50 cents apart, some are $1 apart, which is huge. Some spreads are like a cent apart if you're trading things like SPY or QQQ. So this options overview should at least get your feet wet when it comes to options. You don't need to overcomplicate options. We actually trade a very simple strategy in the Profit Link community. We trade a strategy that only takes 10 minutes of your time per day, and it has massive success. So when it comes to options, really less is more. Knowledge is power, but it can take a lot of time and it can be a little bit more complicated than it really needs to be. So hopefully this guide serves you. Hopefully it gets your feet wet and you hit the ground running the next day on options. Now make sure you subscribe, like this video, and I'll catch you in the next one.